Welcome to Alpha Recap. Markets closed and we've got a full rundown of what mattered on March 18th. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Lots to unpack. The tape was really a tale of two markets.
Right. Tech, industrials, and renewables led the charge, but regulatory and geopolitical noise kept other parts of the market choppy.
Exactly. Analysts note momentum around AI and semiconductors, but headline risk in crypto, healthcare, and cannabis trimmed some gains.
Quick top-line numbers to set the scene. We had a major battery plant deal announced, about $4.3 billion. Big AI and memory tie-ups, and a $2.2 billion payout plan in the crypto restructuring world. Oh, and Michigan cannabis sales were down about 3% year over year.
Those sorts of figures shaped a market that closed mixed. Strong in innovation-driven sectors, and more volatile where regulation matters most.
Let's start with technology, because that's where a lot of the excitement was. NVIDIA-related robotics partnerships showed up in the headlines. Bottom line?
The NVIDIA ecosystem keeps stretching beyond data centers into robotics and industrial automation. Momentum indicates that manufacturers are already planning CapEx for smarter factories, which is a practical revenue pathway for GPUs and systems vendors.
So, what really stands out here is that AI demand isn't just about cloud servers anymore.
Right. It's showing up in factories, logistics, and robotic applications. That links tech to industrials in a way you can almost measure in purchase orders and automation contracts.
And we had AMD and Samsung announcing a next-gen memory tie-up. Explain why that matters in everyday terms.
Think of memory as the short-term workspace for compute. Bigger, faster, or cheaper memory changes how much work you can do per dollar in AI training and inference. Data suggests this could alter cost curves for servers and edge devices, which matters for cloud providers and enterprises alike.
Makes sense. So memory supply dynamics become a pulse check for AI margins.
Exactly. Watch inventory days and CapEx guidance from chip makers. Those will tell you if this is a sustained cycle or a short bump.
Switching gears. Industrials. The Tesla and LG battery plant hit the headlines at about $4.3 billion. That was a big one.
Yeah, that tracks. That level of capital commitment signals reshoring of battery production. It points to stronger long-term demand for critical materials and local supply chain development.
And that links back to materials. Copper, nickel, lithium precursors, right?
Correct. Materials demand could pick up if these plants move from announcement to final investment decision and then construction. Execution and permitting will be the keys to watch.
Okay, before we move on, crypto. The FTX restructuring plan came with a $2.2 billion payout number. What did that do to sentiment?
It brought some clarity. Analysts say the payout plan helped stabilize creditor expectations and decompress an important overhang. But regulatory and custody risks remain, so the recovery story is uneven.
So platforms that can demonstrate governance and custody controls probably gain trust faster.
Exactly. Credibility, audits, custody arrangements, insurance becomes a differentiator.
Now, healthcare. A mixed day. There was a big approval and a rejection that sparked a steep sell-off.
Yeah, that was a brutal reminder of binary risk in biotech. Clinical and regulatory calendars can move valuations sharply. Analysts note you have to treat those events as primary drivers of short-term dispersion.
I mean, when you step back and look at this, one approval can be transformative down the road, but one rejection can wipe out near-term gains.
Right. Separate the durable science from the binary regulatory outcomes. They operate on very different timescales.
Cannabis had another uneven day. Virginia moving to legal retail, Ohio tightening rules, and Michigan down about 3% year over year. Short take?
It's a patchwork market. State-by-state divergence means allocation decisions are effectively a series of local bets. Social equity grants add a structural layer you can't ignore. Slow value transfers that reshuffle competitive positioning over time.
So execution and license timing matter as much as national trends.
Exactly. And watch state legislative calendars.
Energy is interesting because it's bifurcated. On the one hand, geopolitical oil risks in the Middle East and Libya keep premiums alive. On the other, renewables and storage had big project wins.
That telescopes the market. Short-term oil spikes can happen on headlines, but longer-term flows into renewables and grid-scale storage appear intact. Investors may want to stress test energy exposure for both vectors.
So how should listeners think about that in plain language?
Think of two buckets. One that benefits if an oil shock hits, and another that benefits from the shift to clean energy. They can move opposite each other in the short run.
Short reactions.
Big move.
Not what anyone expected.
Yeah, absolutely.
Let's talk cross-sector themes. First is that AI and semiconductors are now cross-cutting demand drivers into industrials. Explain the connection.
When compute demand rises, OEMs spend more on servers and memory. That flow then moves into robotics and automation as AI capabilities enable new applications. Momentum indicates that's already translating into CapEx orders.
And the industrial policy angle, reshoring and federal funding, that amplifies materials and manufacturing narratives.
Yep, battery plants and final investment decisions lift demand for critical minerals and specialty materials. But analysts caution that permitting and offtake are key execution risks.
Regulatory risk is the dominant cross-cutting hazard you mentioned earlier. Can you give a simple framework for listeners?
Sure. There are secular stories, AI, renewables, and there are event risks, FDA rulings, court cases, state laws. In the short term, event risk often overwhelms the secular story, so a rolling calendar of regulatory events is essential.
Analysts note timing often trumps thesis in many short-term moves.
Exactly.
A lighter note. Social commerce and live streaming kept popping up in the consumer briefs. That was a recurring theme.
Yeah, social commerce is reshaping distribution. It increases conversion, but requires investment in fulfillment and analytics, which in turn links back to warehousing and logistics demand.
So consumer trends tie back to industrial real estate. Full circle.
Right. That's why cross-sector analysis matters.
Let's hit the most consequential moves and why they mattered briefly. NVIDIA robotics partnerships, the Tesla LG battery plant, AMD Samsung memory collaboration, the FTX payout plan, and the healthcare approval rejection mix. One sentence on each.
NVIDIA partnerships expands AI into industrial automation, supporting multi-year CapEx. Tesla LG plant, strong signal for reshoring battery capacity and materials demand. AMD Samsung, could shift memory economics for AI infrastructure. FTX payout plan, provides legal clarity but leaves systemic custody questions. FDA mix, reiterates binary regulatory risk in biotech.
Short reactions.
Yeah, that tracks.
Honestly, I was a bit surprised by how much policy headlines moved sentiment today.
Me too. Regulatory outcomes still have outsized influence, even amid big tech and capital spending narratives.
Okay, before we wrap, let's give listeners some practical, non-prescriptive insights. Quick bullets they can use for research and risk management.
Prioritize a rolling calendar of regulatory events and major hearings. Watch inventory and CapEx guidance from chip makers for signs of a sustained semiconductor cycle. Stress test energy exposure between short-term oil risk and long-term renewables. Track permitting and offtake on major battery projects. Monitor governance and custody in crypto plays. And for retail, tie distribution changes back to warehousing and logistics demand.
Good checklist. Remember, this is informational only. Analysts note these are market observations, not investment advice.
Correct. This is for informational purposes. We are not giving personalized investment recommendations.
Final takeaways and a few quick lines.
Markets closed with a clear bifurcation. Secular, infrastructure-driven themes like AI, semiconductors, batteries, and renewables showed strength, while episodic, regulatory, legal, and geopolitical events injected short-term volatility. Over the next 3 to 6 months, watch corporate guidance from AI and cloud suppliers, execution on battery and renewable projects, regulatory calendars in healthcare and cannabis, and any escalation in Middle Eastern tensions.
Perfect. If you want to dig into any of today's sectors, we put a short list of watchables on the site.
And as a reminder, treat this as market color and context, not advice.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening. We'll be back with another recap after the next close.